Hello, my friends. How are we doing today on this wonderful Wednesday? Oh, how cute. Wonderful Wednesday. It has been a little bit since we've uploaded any videos. I had mentioned that pre-election where I live at, I wasn't going to be touching anything just because of the way the market was behaving. It wasn't really akin to my style. And I had a subject for today's video, and I've gone in the past here a little bit to kind of illustrate my subject for today's video. Alright, this is just a chart. This is just a pound versus dollar. Okay, this is back in like beginning of May, mid-May of this year on the 4H time frame. Okay, and it's just kind of interesting. It just seemed like it would show some good examples of what I was conveying on how trading can be it can be like disheartening and different compared to what amount of money you come into the game with. Okay, even in business or investing in general, it's said, okay, by majority it's said that it's so much easier to make more money when you have money. They never follow up with that. They never go into detail about that statement. They just say that it's easier to make money if you have money. You hear that all the time. Okay, it doesn't help people that are on the coming up, so to speak. It doesn't help them one bit because there's no detail or substance behind that statement. That's why I find that statement absolutely hilarious, because I've yet to hear people follow up with the statement and say why. Why is that statement true? Okay. And I couldn't tell you, but all I can tell you is that what I see that an example that could make that statement true is my experience in trading. Okay? Because a lot of times when you have a small balance, okay, and you're trying to grow it steadily, you're generally playing position to position. So you have an idea, an analysis, kind of a game plan of how you are projecting price to go, and you set up your parameters and you take the position, and either the position plays out or you get stopped out. Okay, either you win or lose. You leave it out open. Okay, there's a whole nother aspect to trading too, and that is traders that are coming into the game with a larger amount of money than you most likely have. Okay, I don't have no money. I have very small money. So when I think about that, and I think about, well, why does price keep doing this? It's simple, because if you know of other traders, okay, and you know this business, you know that there is people that are, it might blow your mind, but there is hundreds of people, thousands of people that are making 4, 5, 10, 20, 30, 40 grand a day. You don't think that's possible? There's a lot of people making a ridiculous amount of money in the markets. It might not be 20 grand a day. Just say it's 4 grand a day on a winning day, okay? Now, why is that important in the subject matter? Because when you're coming into the market with your $1,000, okay, and let's say right here, price goes up. This is a perfect example here. Price goes up and you say, oh, okay, we're making a little bullish move here. I think I'm going to be smart and wait for a retracement and go ahead and enter my position down here, maybe have a stop here, and maybe have my take profit up here. Okay, very simple trade. Nice trade, nothing wrong with that trade. That's simple market structure. You have a low, you have a higher high, you're projecting price to make a higher low right here, and then you're going to take your profit at another higher high to continue with the market structure. Okay, simple market structure. So what happens here when you enter this trade? You did good. You entered right here. Excellent. Good job, my friends. You are now trading with the big boys. You know, you're putting a little bit of work into your craft. Okay? So you enter here and price starts going up in your favor. You're looking great. You entered with $500, okay? You're now up $50 already, okay? So say you're up $50 in your trade already. Great. You know, your take profit's like 75, okay? So you're in the trade and you get up, you're up about $50. You're doing great. All right? And then what happens here? Bam! Well, we lost our little cursor here. What happens here? Bam! It pulls down real quick. And when you see this happen over and over again, what is it that just makes price pull back like that? You know? It's a good trade. So why did it just jump down like that? Because right here, this small maneuver right here, this was all going on during the low time frames, okay? And what happened was, you have to remember, this is kind of a note to myself too, I have to remember that if my trade is up doing well and moving really good in my favor, so is several other people that have a lot more money on the table than I do. So then it kind of becomes, at that point, this is a psychological speak here, at that point it tends for me personally to become a game of chicken almost, okay, on who is going to close first. Because when you have majority of traders are trading, with a large amount of money and high leverage on small time frames. Why are they doing that? Because they're greedy. It's that simple. Okay? That's why they're doing that. So when you see price move up like that and then all of a sudden just collapse after, you know there's money up here. You know they want to take that money up there, but they didn't take it. They just went like a third of the way up, 40% of the way up, and then pull back real quick. Because you have to remember there's a lot of traders with a lot of money on the table, and at the same moment where you were up, say, $50 in your trade, you could have closed your trade right there with a $50 profit off of your $500. Well, you just made 10% on the day. That's better than any index fund, okay? But what you're forgetting is that you're up $50. There's somebody in the market at that same time as you. They are up $5,000. They are up $50,000 on that same move that you are. It's the same maneuver, it's just a different amount. Okay? At the same time you see a good setup and you're putting 500 down, somebody else might have a similar trading style to you and they're putting $500,000 down on that trade. They're willing to take a $50,000 loss because they're looking to make $50,000 on that position. And what happens? It moves up a little bit. They start seeing, oh, great. All right, 30,000, 40,000, 45,000. They're up 45,000. They close it. They don't care about up here, my friends. They don't care. They see that the money is substantial enough in this little bit of a move, and they close it. And then price pulls back because it needs to fill that sell order, so to speak. So that is kind of what happens a lot of times in the market. You have to keep in mind that there's always somebody way huger than you out there, and you have to keep that in mind. I haven't taken any positions in the past week, and today I saw somebody. They had posted their winnings today, and it was impressive, very impressive. Over $30,000 in a single day. That's impressive right there. But you might think, oh, that's crazy. How did this person make $30,000 in a day? Well, at the same time where you might make $30 in a day of trading, all he did was just make 30,000. He just has more zeros in his account. Okay? So just keep that in mind. And that is why, going back to the beginning of what I was stating about having money to make money, that is an example in trading of how that relates in trading. Because with your small account, a lot of times no win is good enough, No win is good enough. You're not satisfied with the $50 win, the $80 win, the $100 win, the $200 win. It doesn't satisfy you. You don't want it. You want the 2,000, the 3,000, the 4,000. Why? Because that's probably what you lost. That's the kind of trades you were losing when you were starting out in this business. And you feel like the market owes you to pay you that kind of money back. The market doesn't owe you a damn thing. So get that thought out of your head right now. Only you owe yourself to pay yourself when you're up. So when you have a small account and you have good trades that are going great in your favor, you're not closing them. Because you're not satisfied with the small win. It's not win, It's like, how many times have, for example, I've entered a position, I've been up, $13, $15, $20, and say my take profit was like around 40 some or 50. And I'm just of the belief that it's going to hit my take profit. Well, it's not going to do that. It's not going to do that all the time. So why would I not start getting in the habit of just taking the $10 and the $20 every time it presented itself? Think about that in your trading career. Just think about the amount of times where the moment you were convinced you were in a winning trade, if you had just closed it right there. That's hard to describe, and unless you've experienced it, it's kind of hard to really understand that mentality. But it really is true for me, Every time I'm convinced that I have made a excellent projection and the trade is going great and in my favor, at that moment, that is the moment that I am teaching myself to just close the trade. Because more often than not, I'm up 30%. Well, somebody that has 100,000 margin on the trade, they're up 30% too. So, good and well, they're going to take that 30,000 off the table. people can think what they want, but this truly is like the quickest way to lose money and the quickest way to make money. It really is. It's a very interesting business. So that kind of mentality thought is something that I have developed or am developing too in my repertoire, is the ability to identify when I'm convinced of something. And that is the moment to close the position or to open the position, depending on the situation. So that is kind of just an interesting tidbit I had. You have to remember about the other money at play. You're not the only one in the market at that time. So you have to keep that in mind, that there is many people in the market at every moment of every day. And then what happens? It ends up going right. Excuse me. It ends up going right to where you had projected in the first place. But as far as this initial maneuver here, this right here, why did it pull down like that? It's very simple. It's because large accounts trading heavy leverage were in the money, and they closed it. They were content to close their trade, 5,000, 8,000, 10,000. You can kind of get a gist of that if you ever have seen anything on social media, okay? Because a lot of, 99% of everything is hot garbage. But if you read between the lines, you can initially tell, excuse me, my throat. You can initially tell what kind of trader somebody is. Because a lot of times you might come across somebody and you'll see the trade that they're recording, and then you can kind of tell, wow, this guy, it just went right up, and he was up 6,000-7,000, and he closed it right away. That was only like 2 minutes. Well, yes, of course he closed it right away, because that's a lot of money. He's not going to give it a chance to come against him, because he understands the market, how it ebbs and flows. So he takes it off the table when he is happy with the profit. Okay? So why is that difficult for small accounts? Because small accounts are never happy with the profit. They're never happy with the profit. They really aren't, because they continually keep their positions open to kingdom come until it stops them out and comes back against them. If you're trading like that, when you are up, you need to just close it. It doesn't matter the amount. When I think about to focus on a more positive note, when I think in the past and I think of some of my best trading days ever, what were my best trading days? They were quite simply days where price went in my favor and I closed it. I didn't care. I wasn't concerned about it going to, projected 4-to-1 take profit point. I wasn't concerned about that. I was up 40%. I closed it. I waited for another opportunity. I took it. The market thinks I'm going to keep my position open. It's teasing me, going in my favor. I deny them the tease. I close it. So that is kind of a behavior for future reference for me to kind of focus on and get into the nitty-gritty of my mind and recognizing my own behaviors in the market. Okay? Because let's be honest, the world we live in is pretty cutthroat, as is this business, and as is jobs and employment and things like that. That is why I take such great seriousness on trading, because it truly at this point in my life is like the last bastion of hope, you could say, to achieve financial freedom. I won't get it through a job. That's guaranteed at this point. That's not happening. So I'm not going to get it by any other means. This is the only way that I am able to achieve the level of financial freedom I seek. That's why I focus so heavily on my craft, and as you should focus on your craft. We will see everybody on the next episode. Peace.